I welcome you all, happy investors, to the second part of the stock market value investing series by Happiness Prime. I can feel the positive vibes that how excited you were when you were watching the first video, how excited you were while learning about market capitalization and all the experiences and all the interest you had about stock market. And right now you got this platform to learn who is just teaching you free of cost on this amazing platform. So let's begin with this second video, and I'm very grateful that you clicked on the second video. And now let me just assure you one thing. Let me just assure you this one thing very carefully. You have to listen this, that what content which I'm speaking, I'm not just speaking it by reading from somewhere or just by learning from somewhere. I have experienced this thing. I have went through each and every knowledge. I have went through each and every terms. Then I have practically implied it. I have practically implemented on all the information which I'm sharing in this video. And then I have seen the results after the practical implication, and then I thought that what I got from inside, you can see the honesty in my eyes, that what I got from inside, what I got from those practical implications, I just wanted to share with all my kind heart. I wanted you to learn free of cost. I wanted you to learn about all of these ratios so you can experience the practicality and you can experience all the fun and all those happiness moments which you can get by investing in stock market just to become financially free. A very good evening to you all. My name is Shubham Bisht and I welcome you all once again back to this amazing platform of YouTube named as Happiness Prime. This Stock2Prime video, the second part of the stock market series, where we are going to learn about enterprise value, the most important book value of a share. Then the third major ratio which you have to study before investing in one of the heavy industries, just like infra industries or cement industry, or you can say like those heavy, like which are using multiple assets of higher value like machineries, cars. That ratio is named as PB ratio. Yes. And for those people, we are going to start in a little bit. For those people who haven't watched the first video, I would suggest you, because these video series are interlinked. So you must know about market capitalization first, which we have explained in the previous video. You must learn about PE ratio. You must learn about EPS, that is earning per share. And you must learn about the platforms which we have displayed, that free of cost platforms which you can use for value investing. You can just go through all of those platforms and go through each and every company's financial data and their performances over the last 10 to 20 years. So let's start with this first term which we are going to discuss, that is enterprise value. In the previous video we learned about market capitalization. Can anybody tell me what is it? What is market capitalization? Do you remember that? If I want to own an XYZ company, if I want to become the solo owner of that XYZ company, then the amount which I have to pay, that is known as market capitalization. Now we are shifting towards enterprise value. What is enterprise value? See, these all knowledgeable videos are just coming to you, so I want you to be fully focused, and you have to write down each and everything so you can get a reference for future. Enterprise value is the value which you get after adding the surplus fund and all the reserved cash which the company have and subtracting the debt which the company needs to pay. The amount which comes is known as enterprise value. Let's study this with an example. I know you love examples. Let's take an example of Cipla. Let's say if I want to buy Cipla and Cipla is worth 1 lakh rupees. Let's say the market capitalization is example it is 1 lakh rupees. So if I need to pay 1 lakh rupees, I can become the solo owner of Cipla. But if the company is having 50,000 rupees cash in its wallet, you can say in a almari of the company, the 50,000 rupees cash is just stored and they forgot it. So I paid 1 lakh rupees to buy Cipla, and I got 50,000 rupees cash from their almari in the counter. So how much did I pay to buy or to become the sole owner of the company? I paid 50,000 rupees. So that 50,000 is known as enterprise value. Now let's say an example that Cipla have taken a loan of 1,50,000 from somebody. With interest they have to pay 1.5 lakh rupees. So right now, if I need to buy Cipla, then that debt is also mine. Then debt is also, I need to pay that debt. So the value, now let's just recalculate that value. What is an enterprise value? If I want to buy a company, then all the surplus cash with the company is mine. All the debt which the company have taken or the company needs to repay is also mine. And the value which comes in the end is known as enterprise value. Let's study this with a live example.
Let us go through some live example of enterprise value, and let's get to learn that how different it is from market capitalization. Here I have shown you the company JSW Steel Limited. It is a sector of steel and iron products. Here you can see the market capitalization of this company is 1,83,007.76 CR, but the enterprise value of the company is 2,23,899.76 CR. What does that mean? Is company is having cash of 11,401 CR and the debt of 52,293 CR. That means company is not worth 1.83 lakh, but company is worth 2.23 lakh because company is also having 52,000 crore debt with it. Let's see another example of a magical world entertainment limited. Here you can see this is very interesting factor where you can see that company's market capitalization is only 50.11 cr, but enterprise value is 1123 cr. Now what does this denote? You already know this, right? That the company is having, definitely company is having a lots of debt. That is why the enterprise value is so much high. You can see the debt is having 1076 cr. Company is in debt. That is why market cap is only 50 cr and enterprise value is more than 1000 cr. Company is having cash of only 2.95 cr, which is not in compared to this value. Let's see any other companies also, so you will get to learn about completely about this factor. Let's see about Tata Steel BSL. Let's see about Tata Steel. Here you can see market cap. If I want to purchase Tata Steel, I need to pay 27,000, but the market cap it is showing 10,480 CR. Because companies, this whenever enterprise value is higher, then definitely company is having debt which company needs to repay, and that is why the enterprise value is so much high. Company is having cash but not enough cash to just clarify all the debt. That is why company is having enough, more than enough debt, and the enterprise value is high enough. So this was the actual real example of enterprise value.
So with the help of the live example, I hope that enterprise value is completely clear, and still I'm going to repeat that particular statement, that the amount which comes after adding up the surplus cash or the reserved cash which the company is having and subtracting the debt which I need to pay, which the company needs to pay, is the amount which comes after adding up the surplus cash and subtracting the debt from the market capitalization is called enterprise value. Let's come to the second point which we are going to discuss in this video, that is standalone mode and consolidated mode. In the ticker phonology there are two modes, that is, one is standalone mode. When you will click on standalone mode, the company's data which you are watching, all the performances ratio which you are watching on that particular page, it is completely based on company's personal team. And when you click on the consolidated mode, then the data which you are watching is coming from all the company's investments in different companies acquisitions of different companies. So all the profit which they are gaining from different acquisitions which they have made and different investments which they have made in different companies. So that complete profit growth and all the ratios after comparing the personal growth and the acquisition growth, that ratios are being showed when you click on the consolidated part. I'm going to show you with this live example.
Let us see a live example of standalone mode and consolidated mode. Here in the techorphenology.in, here you can see standalone mode. Here, right now, the website is in standalone mode. If you go in Kotak Mahindra Bank P&L statement, here you can see in March 2020, interest earned by company is 26,929 CR and the profit before taxes is 7,804 and net profit is 5,947. Now let's click on consolidated. Remember this figure, that is 5,900 by its own team, by the Kotak own team. Right now company made in March 2020, company made a net profit of 5,947 CR. Let's click on the consolidated mode. If you just click on it and check the, see all the data is changed, and if you click on P&L statement, here you can see from 5,000 it is converted to 8,593 CR. That is, here the values came from the company's acquisitions also. All the companies in which Kotak Mahindra invested and Kotak is having acquisitions in, all the profit from those companies plus Kotak's own team profit is equal to consolidated net profit, which you can see here, that is 8,593 CR. Let's take another example of Tata Motors. Here you can see the standalone mode of Tata Motors right now. Company's market cap is 1 lakh CR. I think 1 lakh CR, yeah. And if we click on P&L statement, here you can see in March 2020, the net sales of company was 43,000 crore. Just remember this figure. You are going to find it very interesting that net sales of the company in March 2020, when we clicked on P&L is 43,928 CR. Now let's click on consolidated. Now it will show the figures after calculating the company's investments and all the profit which investment companies made. And now let's click on P&L statement. Here you will see our drastic changes. Here you can see 2,61,067 CR is the net sales of Tata Motors. That is from their own team plus all the companies in which they invested their money in and all their acquisitions. The total profit gained by the company's investments plus their own team, that comes to 2,61,000. So this big difference you can also see in companies when you click on standalone versus consolidated. So every single time you have to go in consolidated also. If the company is having consolidated ratios, then you have to check that out too.
So now you got to learn about the standalone and consolidated mode. So never judge a company by just looking into the standalone modes. You have to check the consolidated statements also. That it might be possible, just in the case of Tata Motors, that company was having 2,61 CR of profit, but in the standalone mode it was showing something 40,000 CR. So this much greater changes you can see in the consolidated mode. Now let's come to the third thing which we are going to discuss, which is very interesting and you will love it. That term is named as book value. Book value is one of the major terms which is very easy, and I can assure you that if you won't pay attention to this term, you will definitely forget it, and you have to rewatch the notes which you are writing and rewatch this video just to learn about the book value again. So I know that it has happened with me, that's why I told you, and I'll explain in a way that you will never forget it. Don't worry about that. I'll explain with such an example that you will never ever forget it. Now, book value, what is book value? Now, let's imagine that if a company decides to sell each one of its hard performing assets, then every shareholder, the amount which every shareholder will get, that is known as book value. Let's take an example that if Tata Motors decides to sell each of the hard performing assets, that what they are having. What is hard performing assets? All those substances which we can touch, feel, smell, no, not smell, just touch and feel objects, just like machineries, or you can say cars and factories, and just like in the case of banks. So not in all of the industries book value is important, just in few, that is capital intensive industries only, that is cement industry and infra industries and power industry and banks. In these industries, P by B ratio is very important and book value is very important. So repeating once again, and then we will go to the live example. That is, you can also repeat with me. You know that, right? Let's say with me, the value, the amount which each shareholder will get if the company decides to sell all of their hard performing asset is known as book value. Let's take the live example of that, then I'll explain you about P by B ratio.
Let's go through the live example of book value. Here in Tata Motors only, we can see the book value is 53.69 rupees. That if today Tata Motors choose or decides to sell each one of its hard performing asset, then every shareholder will get 53.69 rupees. Now let's see the one of the banks, the one of the popular banks. Here it is, book value of Kotak Mahindra Bank is 318 rupees. That is, today if Kotak Mahindra chooses to sell every hard performing asset they have, then each and every shareholders, right now company is having 198.24 cr crore, that is 198 crore shares, then the book value, that is every shareholder will get 318 rupees behind one share. So this was the example of book value. Now let's move on to the PB ratio.
We just saw the live example of book value. The Kotak Mahindra book value is above 300 rupees. That is a very good signal. And just all the heavy industries, you have to check one of these factors. And now let's come to the P by B ratio. That is completely connected to the book value. That is price of the share divided by book value, the amount which comes, that is known as P by B ratio. Now we don't have to check the PB ratio in IP companies, that is technology stocks, the intellectual property companies, just like all the technological stocks which are there in the market. You don't have to check the P by ratio in those cases, because their companies having more employees, companies having more, you can see the employees in accounting language, employees are not assets, these are liabilities. So company cannot be judged on a case where they are having not many assets. That is why the book value of intellectual property companies, IP companies, are very low. That is why you just have to focus on the heavy industries. Whenever you are doing value investing or stock analysis of any one of the capital intensive industry, cement industry, power industry, and banks, you can say infra industry. So whenever you go through these industries, then you have to check that book value must be high and PB ratio must be less. Then the company is worth reading ahead. Then you can focus on more factors which we are going to discuss in the next few videos also. Right now we have discussed around 5 to 6 factors in total. So if it is low, if the PB ratio is low, then definitely that company is one of the good companies. Then you have to compare it with the peer companies, which peer companies, how much PB ratio they are having, and from this fact you can get to a better decision. Let's take the live example of PB ratio.
Let's take a live example of PB ratio. Here you can see Kotak Mahindra Bank's PB ratio is 5.58, and if we compare, see, book value is quite good. 318 is a very nice value. So if we compare it with all the peer values, that is it really good in this sector, or other companies are having higher book value? Let's compare it with the peers. That is all the other companies of the same sector which we can compare with. So HDFC Bank is a good comparison. It is one of the best banks. ICIC Bank is a very good bank. According to the status, we can see that yes, PB ratio is quite higher in the case of Kotak Mahindra Bank. Let's see the book value of HDFC Bank. It is 369, and right now share price is lesser. That is why the PB ratio is 3.83. So this is also, HDFC Bank is also a good way to invest. And then we can see more banks just like ICICI Bank. If we check, the book value is 208 rupees right now, and the PB ratio is 2.91. So this is how you have to compare the book value and the PB ratio. It must be, book PB ratio must be as less. If it is less, then definitely the stock price is less and book value is higher. If the book value is higher, that is, stock is underpriced right now. So from this factor you will get a positive denote that okay, PB is good. Now let's study the other factors in case of banks. So this is how you get to come to a conclusion that PB ratio is good or PB ratio is high.
So I hope you got to learn everything about the enterprise value, standalone and consolidated mode importances, book value and PB ratios, and you got to learn that how a company is good or bad according to PB ratios. And if you get the positive notations from the PB ratio, then you can of course continue your study into different other ratios also. But I have to tell you this one thing, that you must know that how to read an investor's presentation, because that is one of the major factors which you have to learn, and we are going to talk about that too. No issues, no worries, don't worry about that. First of all, we are going to learn about all the ratios, which is definitely going to make you a better and valuable investor. And then we are going to tell you that how to do a investment presentation study. So now, just finishing this video, yes, finishing the second video. I hope you got to learn all the best values from this video, and stay tuned. And I know that you are very excited for the third part. So yes, it is going to come very soon. You have to revise what you learned in the first video and what you learned in this video. I hope you and your family and all your loved ones stay healthy, stay happy, and be motivated and get the best perspective of life which they ever wanted to have for their loved ones and for themselves. Have a happy life, stay happy.